I'm Rosemary Miller here with Samuel Lyman, a Forbes contributor who's going to fill us in on crypto regulation and why he thinks the crypto regulatory winter is starting to thaw. Thank you so much for joining me today, Samuel.
Great to be here.
So, Samuel, before we get into the crypto regulatory winter starting to thaw, what prompted the crypto winter to begin with?
Yeah, it's a great question. I think you can really trace it back to the collapse of FTX. So for those who don't know, I'm sure most people do by now because it was such a big news story, but FTX was one of the biggest crypto exchanges. Turns out the exchange was commingling customer funds with their own assets, trading customers' funds, and essentially losing billions of dollars in the process. So it was this very dramatic collapse of a crypto exchange that was based offshore, which really raised red flags for people in Washington, where they recognized that there is so little regulation in the industry that it really puts investors at huge risk. So at that time, crypto winter itself was already underway, but I think that's really when the regulatory winter started to set in. Because with the debacle that was FTX, people recognized there's so much regulation that's still needed in the industry if it is to have a clear path forward. And so that was in the fall of last year, and that's what emboldened Gary Gensler to take a much more assertive stance when it came to crypto. So starting really in January and February of this year, the SEC chair Gary Gensler came out and he said effectively that everything but Bitcoin is a security, and that sent a huge chill across the industry, where if you're a token such as Ethereum or Tezos or really any token in the crypto asset industry, you're suddenly questioning, do I need to lawyer up? Is this asset that I've been issuing, is it a security? And so it sent out a lot of confusion across the industry and had people really on edge. And so Gary Gensler, he took advantage of that in hearings in the House of Representatives, where he has again asserted that everything but Bitcoin is more or less a security. And it just created even more confusion. But then the tide started to turn later this year. And
before we get into that, I want to go back to you saying the crypto winter had already kind of set in before FTX. So you're saying the crypto regulatory winter started around FTX, but the crypto winter, would you attribute that to Luna, maybe?
Yeah, I would distinguish the two different winters. I think it's important to be clear there, because some would argue that even now we might still be in crypto winter. And so just for those who don't follow crypto as closely, what crypto winter describes is a prolonged period of depressed prices, lower investment in the space, low trade volume. And so you could even trace crypto winter in terms of price action all the way back to, say, December of 2022, December of 2021. That's when Bitcoin peaked. And that's when a lot of the crypto assets really started to decline in price. And it became very apparent exactly what you mentioned, that crypto was in a bad way with the collapse of Luna. That's when people recognized that, it wasn't just a temporary reprieve from good price action. All of crypto was hurting and all of crypto was falling in terms of price action. And that is a good point to bring that up in terms of the regulatory winter, because that's where people recognize that stable coins, for example, let's say specifically algorithmic stablecoins, which is what Terra Luna was, those were prone to real threats where people could short the token. And it was sort of a misnomer to call an algorithmic stablecoin a stablecoin, because there was very little that was stable about them. When it can go from a value of $1 to $0, or $0 essentially is what happened with Terra Luna, right? So yeah, that is correct. You could trace back. I think it entered the public consciousness, this idea of a crypto regulatory winter with the collapse of FTX. But for people who really follow the space, you could honestly trace all the way back to the collapse of Terra Luna, definitely.
So would you say, back to today, would you say that the SEC and the CFTC, are they starting to get on the same page about how they regulate cryptocurrency, or are they still kind of fighting?
I would say they're still definitely fighting. So there's a turf war going on between those two agencies, where the SEC, because they're a federal bureaucracy, they have a natural incentive to assert their power and control over this emerging industry. So the SEC's stance is that effectively every crypto asset is a security and therefore falls under their purview. Whereas the CFTC, because they oversee commodities, they are trying to make the play that most of these digital assets actually are commodities. And so what is happening right now on the Hill, we're not going to have any regulatory clarity with these two agencies fighting amongst themselves. The only way we'll achieve regulatory clarity is if we can get some clarity from Capitol Hill, from our democratically elected legislators. And so that's the goal of the House legislation that recently passed out of committee just last month. It's called the Fit for the 21st Century Act. It's essentially the House's version of a comprehensive regulatory framework that clarifies which crypto assets are securities and which are commodities to essentially end that turf war between the SEC and the CFTC.
Would the CFTC even have the bandwidth to regulate crypto?
That's a real question because the CFTC doesn't have the same scope as the SEC, and that's a real concern that's been voiced mostly on the Democratic side of the aisle. So it is a concern going forward and something that needs to be hashed out when this House bill I mentioned goes before the House floor, and after that when the House legislation goes over to the Senate, because it is a real concern.
And right now, what is the SEC? What are they claiming to be securities versus commodities?
And Gary Gensler, he sat down with New York Magazine in February, and he effectively asserted that everything but Bitcoin is a security. And so by that definition, really every crypto asset is a security except Bitcoin. There's a lot of disagreement and pushback against that idea, not only in the industry, but by the CFTC and even by the courts as well. So that's been another major issue recently is the Ripple court case. If you want me to get into that, I can just briefly. But so what happened with the Ripple court decision was a couple years ago, the SEC filed a lawsuit against Ripple Labs, which is the issuer of XRP, which is one of the biggest cryptocurrencies in the space. So in this lawsuit, the SEC asserted that XRP was a security and that Ripple was issuing an unregistered security, and therefore should be the law should apply to them. And so what happened in this court case, however, was a monumental decision for the space. So Judge Annalisa Torres, she actually ruled that when XRP was first issued and sold to institutional investors, it was then a security. But after that, when XRP was sold on crypto exchanges, you had a lot of retail investors buying this asset, not knowing that it was tied to a specific company. And so by that definition, it actually didn't meet the criteria for a security. And so that has huge ripple effects, if you will, for the industry itself, because the implication, if that ruling stands, is that the majority of crypto assets sold on crypto exchanges like Coinbase or like Kraken, for example, against what Gary Gensler has said, that those are all securities, they are actually not securities. And so it's had a lot of really large implications for the space going forward. And it's emboldened the crypto industry. It's been notched as a huge win for the industry, and it's hard to deny that it is.
Yeah. I actually remember when the XRP lawsuit first happened, there was this guy in our crypto group chat, and he was shilling XRP. Everybody buy XRP, buy XRP. And then it dropped. And they threw him out of the group chat and everything. I bet he's giving us the finger right now. Anyway, let's talk about the bipartisan efforts, how Democrats are starting to kind of go on to the other aisle with the Republicans when it comes to cryptocurrency.
Yeah, so that's an exciting development. So earlier this year, some were starting to believe that cryptocurrency itself was becoming a partisan issue, where Republicans were for it and Democrats were against it. But there were some really sharp policymakers in the space who pointed out that this isn't a partisan issue, it's actually a generational issue. So there's been some leaders on the Democratic side of the aisle who have really been forward thinking in the way that they've approached crypto legislation. One of them is Representative Richie Torres. He's a younger congressman who actually here from New York. And so Torres and Representative Nickel, they are both very innovative in their approach to digital assets. And they pointed out that digital assets are really good for financial inclusion, for example. And they're really good for value transmission over the internet, which they see as being essential to the U.S. Expanding its internet influence abroad. And so in this last round of votes on the House Financial Services Committee with that comprehensive crypto legislation I mentioned, there were actually 6 key votes from Democratic legislators who voted in favor of passing that comprehensive crypto framework out of committee. And so that's key on a number of levels. First of all, it shows that crypto still is bipartisan. And this House legislation, it needs to pass the House with Democratic votes to have any hope or prayer of passing the Senate as well, because there has to be buy-in from both sides of the aisle.
That's like everything.
Yeah. Exactly. Exactly. And there's even hope on the Senate side as well, though. So Senator Lummis and Senator Gillibrand, Senator Lummis represents Wyoming. Senator Gillibrand represents New York. They actually came together to support a new version of the Lummis-Gillibrand bill, which is essentially the Senate's version of a comprehensive crypto framework. So there's hope in both chambers of Congress that both Republicans and Democrats will continue to work together to pass bipartisan legislation on crypto, which is another reason why I think that the crypto regulatory winter is starting to thaw, because more and more you're seeing Democratic support for these initiatives, whereas in the depths of that crypto winter, it seemed like it was becoming more of a partisan issue. But that crypto bipartisanship has since been resurrected.
I've spoken to Senator Lummis a few times. How is the bill different now than it was when it was proposed back then?
Yeah. So one of the major differences is they define what are called ancillary assets. And so that kind of provides a haven, or really an answer to the question of whether or not crypto is a security or a commodity, because a lot of them will be qualified as what are called ancillary assets, which gives them a certain legal distinction there. They also wrote their bill in reaction to the FTX debacle. They recognized that there was a commingling of funds with FTX. That's what led to so many billions of dollars being lost. And so they put certain provisions in this bill that prevents that from ever happening again. Another really important provision they have in their bill is called proof of reserves, which was actually an idea born on crypto Twitter. So it essentially would require crypto exchanges to show concrete proof at all times that every asset that they have listed on their exchange is actually backed up. So they have to show proof of reserves at all times, which again, the idea behind that is to prevent another FTX blow up.
Yeah, we don't need that.
Yeah, no one needs that again.
So, just curious, your own thoughts. You don't think Binance is going to have a similar situation, do you?
That's a question I'm probably not qualified to answer, but there's a lot of uncertainty there because Binance is based offshore. And I know that they have come in the crosshairs of regulators in the past because they haven't been particularly forthcoming with the assets that they have listed. And were it based in the U.S., I think that they wouldn't have been able to have gone away with some of the riskier moves that they've taken. But they reap a lot of benefits by being offshore because they don't have as much exposure to concrete regulation. But there could be a risk there. I'm really not at liberty to say I don't know is the short answer to that question. But I think it would be nice if we did have a little more clarity coming out of that exchange as well.
Mm-hmm. So what are your thoughts on Know Your Customer?
Know Your Customer is a difficult issue because certainly you never want crypto assets to be used for terrorism or any kind of criminal financing. At the same time, crypto is money, and money in any form will be used for illicit means. It's really hard to prevent that. And I think it's a common criticism of the industry, especially voiced by Senator Elizabeth Warren, that, all crypto is good for is for money laundering or being used for illicit activities. That's not true at all. I mean, the overwhelming use cases for crypto don't touch anything illegal whatsoever. And the truth is that far more cash is used for illicit purposes than crypto is. And so I feel like that's a very unfair criticism of the industry that a lot of people latch onto in an attempt to throw out the baby with the bathwater, so to speak. And so there's a really fine line that needs to be walked with KYC or Know Your Customer regulations because, yes, you want to ensure that there is no illicit activity going on, but at the same time, DeFi depends on a certain amount of autonomy, in some cases anonymity, to be decentralized in the way that it is. And so that's why there's a lot of concern with the DeFi industry. And for people who might be listening who don't follow crypto as closely, DeFi stands for decentralized finance, because some participants in DeFi see certain KYC regulations as being existential, essentially an existential threat to their industry. So it's difficult. It's a tough line to walk there.
This is one of the selling points of cryptocurrency is anonymous.
Right,
yes.
Right.
Well, okay, you also talked about in your article BlackRock and Vanguard, right?
Yeah.
Could you touch on that?
I'd love to. So one of the major narratives driving the last cycle was the institutions are coming. Those institutions came in small part, you had Tesla, you had MicroStrategy that they were investing in Bitcoin, but that promise of the institutions arriving and really diving headfirst into crypto never quite materialized. So that's what's so interesting about our current period, which, we may be in a crypto winter, we might be coming out of it, but if there are signs that we're coming out of it, it's exactly this institutional investment. So BlackRock, for example, is the largest asset manager in the world. and they just filed a Bitcoin ETF with the SEC. A lot of Bitcoin ETFs have been filed in the past years, but none from an asset manager as high profile and well connected in Washington as BlackRock.
For those who don't know, what is a Bitcoin ETF?
So Bitcoin ETF is essentially what would allow institutional investors greater access to the Bitcoin market. It would allow them essentially to buy spot Bitcoin and to trade it on exchanges in a way that's not possible today. And so what's really important with that is BlackRock, they honestly have a lot of lobbying power and really close connections with the SEC. So it could be that the SEC, they deny this claim to become a to file a Bitcoin ETF. But even if they do, it's a really good start. I also want to touch on Vanguard really quickly too, because Vanguard is the second largest asset manager in the world. And Vanguard, they just put their bets on the future of the cryptocurrency industry by buying a 10% stake in Riot. So Riot is the largest Bitcoin mining company in the United States. And now you have Vanguard, which manages, if I'm not mistaken, $7 trillion in wealth. They're essentially betting that Bitcoin's future is bright. Why else would they buy a tenth of the company in terms of the tenth of Riot, right? So they're betting that there will be another crypto spring, because again, we're in the depths of that winter, but they're betting that Bitcoin's price action will increase significantly in the future. Why else would they buy that stake in Riot's Bitcoin mining company? Mm-hmm. So yeah, a lot of really interesting action going on there, which again, I think is evidence that in the very least, this crypto regulatory winter is starting to thaw, and we might be seeing some kind of bipartisan spring in terms of regulation.
How soon?
How soon? I think here's the outlook going forward as far as regulation goes. So we just saw the crypto framework pass the committees in the House, so that'll be voted on in the spring. We also saw a major payment stablecoins act pass the House committee that will be voted on in the House in the spring as well. Honestly, the timeline for very clear regulation going forward, I would put it at best 2 years. And the reason is because in the Senate, you have a very huge crypto skeptic in Senator Brown. So the buck stops with Brown when I try to tell people that they need to manage their expectations when it comes to crypto regulation. So Senator Brown, I would even go so far as to say that he is anti-crypto. He's the chairman of the Senate Banking Committee. So the problem is, even if we get really good legislation coming from the House that even has bipartisan input, even if we get that out of the House and over to the Senate, it could be stymied by Senator Brown, who could essentially just put a stop to it. So the best hope for some in crypto might be either Senator Brown being replaced by a different chairman or the Senate flipping to the other side of the aisle. A lot could change. 2024, I think, could provide more regulatory clarity for the industry, depending on what the partisan makeup is of the House and Senate, as well as the White House itself.
Thank you so much for joining me today, Samuel.
Great to be here. Thank you.